Good day traders, and welcome to LordFX Academy. In this video I'll be sharing with you about how to trade using smart money concept. So smart money concept is very popular right now, and a lot of traders have been diving deep into it. So I would like to break it down very simply for you to understand if you're a newbie. So the idea behind smart money concept came from ICT concept, right? And the overall idea was to make sure that you always enter the market at mostly where other traders put their stop losses, and also at other blocks, right? And also to protect yourself, to put your entry in a reasonable price level that prevents you from being liquidated in the forex market. So smart money concept simply is divided into 5 main aspects and categories. First is the overall market structure. Second is the possible SL/liquidity areas. The third is your point of interest and the other block you want to enter for, that is the safe zone. And the fourth one is the high, the high you're targeting is usually the next high, or the next high before market came to sweep liquidity, something like that. Fair value gap is also a conference you must look out for, because price will always come to fill fair value gap. And also to add to it, you also need to look out for another 3 distinguishing factors, which is the market structure shifts, change of character, and break of structure. So I will break it down very simply for you to understand, so that you can be able to trade perfectly in the forex market. First, you need to look at the overall market structure. So in my case, let's say we are going for a bullish market structure. So price is just going towards the upside, bullish, forming higher highs, right, and higher low, higher highs and higher low, higher highs and higher low. Now the market structure is bullish. So now when you have calculated the market structure, now you want to look for fair value gap, right? Because if you look now, this is now a break of structure, right? This is now a break of structure, and this is the price level that market have broken. We're going to call it a break of structure, and this will be our order block. This should be our order block. I'm sorry, so this should be our order block. Alright. So now what's actually add to the probability of this trade playing out well, that is the probability for the trade to play perfectly, to work well, is if there is a fair value gap. Okay, if there's a fair value gap. In my case, I don't have a fair value gap here, so I'll just simply design a fair value gap. So that is one thing you need to look out for when you are placing trades. Give me a minute. Okay, fair value gap, let's make it yellow. So now the fair value gap is let's say a gap made by price that market need to fill, right? You know that price have to fill the that gap before it moves towards its main direction, whether it's in the uptrend or in the downtrend. So most of the times market always come to fill those gaps. Price don't just go up, right, without filling those gaps, except it is on volatile pairs like gold, and sometimes it also occurs in EUR/USD. But apart from those two, market don't move without filling gaps. That is the way the market it's always fill gaps. So when you look at this, then an SMC trader want to look for a liquidity strip, which is always somehow like this. Then price will, then this should be marked as liquidity, and then you should expecting price to do something like this. sweep this liquidity, come to your order block and move towards the upside. Alright, so you'll be entering around here. That is this your order block here, and your TP will be around here. Your stop loss will be at this protected low below. So why a lot of traders are entering from here? Because they feel this is the next low, and this is where they want to put their either their entry and their SLB around here, or their stop loss will be here. They can buy around here. You can see how price comes, sweep all of them out and trick them that the market is going towards the downside, and then come to your order block and buy towards the upside. So this is just a visual look, right? This is an ideal form of smart money concept, a good structure for you to always look out for, right, as an example while you are trading in the forex markets. So there are a lot of other blocks, right? Like right now there are a lot of other blocks, right? But it is very important for you to now know how to differentiate between a valid order block and a liquidity block. What do I call liquidity block? A liquidity block is a false order block that was designed by its institution, right, and those big market players to trick traders that price is going to be checked at that particular price region. So whenever price reaches that liquidity block, you might take order is going to buy towards that block side, right, and meanwhile that is just a liquidity sweep. You just come sweep your order and come to the real original order block that actually the price is going to fill, and then it goes towards the upside or the downside, or let's say the overall market direction that it was ought to go. So I will show you example of a liquidity block, but first let's focus on smart money concept. So now in this smart money concept right here, the first thing you need to look out for is a break of structure. That is the first. Overall market structure and then a break of structure. Overall market structure and then a break of structure. So now I would like to go to a smaller time frame because that's when it works perfectly. In the smaller time frame, you need to view the overall market structure. In this case, the overall market structure is what? Bullish. Well, as you can see, this gap filled by USD created during weekend, and then market came to fill it. So the overall market structure here is what? Bullish. And after marking out the overall market structure, I want to look for a good example for you guys, a very good example for you guys. Okay, let me just use this one. Although it wasn't perfect, but it actually said something very important. This is the break of structure, right? It's not perfect at all. Okay, so this is a good example of a smart money concept. So now what you need to do is mark out the break of structure. In this case, the overall market structure was bearish, right? Like price was just going towards the downside, selling, forming lower highs and lower highs and lower low. You can see, so just forming lower highs and lower low, selling towards the downside. So now, after finish looking at the overall market structure, the next thing you want to do is you want to mark out a break of structure. In this case, this is a break of structure, right? This is our break of structure, and after this our break of structure, the next thing we want to mark out is the origin that caused that break of structure. That's how we do it in smart money concept. The origin that caused that break of structure, to be honest, this is the origin that caused that break, this other block or this one, anyone wants to use, right? This is the origin that caused our break of structure, this other block, right? This is the origin that caused our break of structure. So we mark it as POI or OB. So I mark it as OB, representing other block. POI means point of interest. So now, after price did this, now a lot of traders love, there's a strategy that a lot of traders use that love consolidation, because they believe that this consolidation, the highs and low are kind of entry points that price always respects. I know some of you that also use that strategy will be familiar with that. So this is going to be a lot of entry points with SL around here for some traders. So this is going to be marked as liquidity. That's what we do in smart money concept. We'll mark out their entry and we mark it as liquidity. We're expecting price to sweep their liquidity and come into our order. And you can see what price did. Price came after forming this, right, after breaking structure to the upside, swept the liquidity, right? Swept the liquidity, do like it's want to buy and then sold massively and came into our order block, and when price came to our order block, started selling, right? So there are a lot of example, right, of smart. There are a lot of example of smart money concept right here in the chart. Okay, and you can keep searching all day long and you keep finding more and more examples of smart money concept. Okay, so let's go to GPU. Let's go to gold, which is one of the most traded pairs in the world, and you can see how smart money concept played out here, right, on gold. This is our entry points, right? This is a breaker structure. Although price was kind of very spiky here, I'm not sure a lot of traders like to hold something like this, like speaking emotionally, right, as a human being. A lot of traders won't be able to hold something like this, but SMCC played out perfectly, the breakup structure and that breakup structure here, and you can see 1:3 to 1:3.5, and it still worked out perfectly. So this to make things more interesting, price actually respected here for long before breaking out, and this was majorly to just strip cash traders liquidity, right? Like I said, the main idea is to make sure that you put your entry where other traders put their stop loss, and because 95% of traders do fail in the forex market, and if 95% of traders fail in the forex market, that simply means that 95% of strategies don't work out perfectly, right? And you want to make sure that you understand as many strategies as possible and mark out possible liquidity zones, right, based on those strategies. For example, support and resistance strategy. When traders see something like this, they want to enter from here as a buy and put their stop loss around here. You know that there's a stop loss around there, so you just need to go and search for the right order block and mark it out and put your entry, right? So that is the idea for trend line traders too. You can also mark out first breakout order block, okay, and that is all. So I also said that I would talk about liquidity block. Liquidity block. Liquidity blocks are order blocks, all right? They are order blocks, but they are false order block or order blocks with low potential of success. How to mark out liquidity block? You can call this one a liquidity block, but it's not actually a liquidity block if you actually enter properly. Well, this just acted as a liquidity block, but it wasn't a liquidity block though. Let me mark out a liquidity block for you. So blocks like this are liquidity block. This other block here was a liquidity block. This is the other block, right? This is the other block, OB / liquidity block. This is the breakup structure, right? I know you're looking for the breakup structure. This is the breakup structure. I know when you mark out breakup structure, you want to mark out the origin that caused the breakup structure, right? Which is this one, all right? But you fail to look at this one, which was the main breakup structure, and then the main order block that price came to respect. This is the other block that you could have entered from, but because traders are impatient sometimes, right, and in fact to even make things more interesting, this other block, this other block is located on a liquidity level, because this liquidity level according to smart money concept. Okay, so that liquidity level according to smart money concept, and you see a lot of traders actually came and expected this other block to play out well for them. What happened? Price mitigated it and destroyed their stop loss, because it is not a valid order block, it's a liquidity block. Although it suits some of smart money, there's just a breaker, this a breaker structure, yes, right, there's an order block here, but there is no liquidity sweep, there is no fair value gap. It is suspicious. Else this conference meets, you see an order block or a change of character or a market structure shift, one of those three, together with you see a fair value gap, you see a liquidity sweep, right, and you see an unmitigated high, then you should be expecting that order block to be valid. Not 100% valid though, but it has a high potential of success, than other blocks like this that just have the break of structure. This is a liquidity block, although it kind of suits Smart Money Concept conference a little bit, but it doesn't have high potential of success, and that's why price just came and destroyed the other block and actually came from here. As if you entered from here, you put your stop loss around here, target 1 to 3, 1 to 3.5, and now how many pips is this? This is a very huge amount of pips, right? I am making a huge amount of profits from the market. So that is the difference between a liquidity block and a normal actual order block. You can mark a lot of liquidity block, right? And I would like you to also do that at home. Just make sure that you always mark liquidity block and other blocks, right? So just make sure that you have that idea and understanding. So this is a sell example of a Smart Money Concept trade, and I would like to show you a buy example, right? So that you guys can see how Smart Money Concept can play in the forex market. Let's see a buy example. So when you are using Smart Money Concept, don't forget, right, there are some tools that you can't do without. So you see tools like Trendline, you always use it in Smart Money Concept. Tools like Fibonacci, you will use it, right? You use it because most times we don't really allow, like, we don't really how will I put it, we don't really use Fibonacci, right, to trade per se, but we just use it to find potential liquidity zone, because we want to make sure that, because we know that if 95% of traders do fail in the forex market, that means 95% of entries are all liquidity. We know, so we want to mark out every possible liquidity we can find, because we know that the market is definitely coming to the SL. Although we can also look out for other conference that might trigger that trade being profitable. For example, now if the news is coming up and our fundamental expert already told us that, okay, yeah, this is about to happen and it's in favor of that kind of entry, okay, then we can now say that, okay, yes, this entry actually is having a high potential of working out properly. But as far as it obeys our SMC conference, right, and we see our break of structure, we see our liquidity sweep, or let's say it's a change of character or a market structure shift, whatever, we see our liquidity sweep, we see our order block or point of interest, right, then we are ready to go for that trade. That's how SMC works for us. Okay, so let me show you another example of Smart Money Concept buy. To get a buy for this current market, I will need to go into a smaller time frame, say 5 minutes. 5 minutes will go well. So now I'm going to find a 5-minute trade using SMC strategy. So this is another example of Smart Money Concept strategy on gold, and you can see how price came, made this break of structure, and then this is the other block, right? You can see how gold just came, hit this other block, started buying through the upside. So this is how Smart Money Concept can dish out a lot of profit for you. And this is the current market. Obviously traders that always like all-time high, right? Even though you use all-time high, it's on gold, right? Even though you use all-time high right here, you are still on profits using Smart Money Concept, even though you are an all-time high trader. That is how interesting Smart Money Concept is, because we are still expecting gold to buy more. That is, if you are patient a lot to hold trades, especially when you see drawdowns like this, and you're a Smart Money Concept trader, you should be on massive profit every time. So that is the idea behind Smart Money Concept, and I hope I taught you well. But if you have any other question concerning Smart Money Concept, please feel free to come to my DM to I'll ask a question in the comment section, right, and I'll reply to you as fast as possible. Okay, yeah, and please don't forget to like, comment, and subscribe to our video. And also, we're also offering a $5,000 fund earnings giveaway. The idea that you have to be in our WhatsApp community to partake from our giveaway. So with your interaction, right, and engagement in our community, we offer you, right, a funding account for free. $5,000 funding account, and we do that to make sure that even though you don't have a capital to trade, as long as you are with us, you're always live in the market, you're always trading, and you're always making money. So that is the idea behind everything. So feel free to click on the link in my bio, join our WhatsApp community, and engage in our posts and get your funded account. Please don't forget to like, comment, and share to your friends and families and other traders you have in your community, and I'll see you in our next video.